Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and I hope that you have weathered the storm somewhat unscathed. I know that for those of you in retirement or nearing retirement, this has been absolutely horrible to watch as your paper profits in your retirement accounts have absolutely evaporated, and it may continue here. So right now is probably the best time for you to get a better education and understanding how to protect your portfolio from downside market moves. Now, I do understand that most of you are Trading Academy graduates, but there are many watching this video that are not, and I would encourage you to click the link in the description to find out more information about free classes around you to help you protect your portfolio in times exactly like this. Now, is this going to continue? Look, I'm no soothsayer, even though my name is Merlin. I can tell you this, market volatility will persist. Out of the 50 countries that we've applied reciprocal tariffs on, there are going to be some of them that step up to the table and say, hey, enough is enough, white flag, we will remove the tariffs, and you're going to get large bounces up and down. Then you're also going to have somewhat antagonistic retaliation from countries like China, who don't want to be bullied around, and they did a reciprocal tariff on Friday, which of course caused the market shock and even further downside. So expect more pain and volatility overall in these markets. Now, let's move away from the speculative stuff and opinions and move to fact. Fact is, we have a bunch of companies reporting earnings this week. And I say a bunch. When you look down at the bottom of the screen here, you're probably going to laugh. You're like, Merlin, really 60 companies? Yeah, I know, only 60. And it's ridiculously boring the first part of the week. I mean, you've got small companies like Levi Strauss and Dave & Buster's on Monday. Tuesday, you've got WD-40 and Tilray. On Wednesday, get a bigger name, Constellation Brands and Delta Airlines. You've got CarMax on Thursday. But here's where it really starts to get interesting. Of course, we're always looking for catalysts. We're looking for things that could give this market a spark or could potentially bring it down. And what do we have? Well, on Friday, it's the kickoff to earnings season. We have major names like JP Morgan, Wells Fargo, Progressive, BlackRock, Bank of New York Mellon, and Fastenal all reporting earnings on Friday. I'm sure many of you are hoping those numbers come out great and we get a nice little catalyst for equity markets. But just understand there's going to be a lot of volatility on Friday's session. The rest of the market, or rest of the week, I think we'll be just kind of digesting other information. And what, pray tell, information is that? Well, we can start things off with rate announcements. This isn't the biggest rate announcement in the world, but the Reserve Bank of New Zealand will be coming out with a rate announcement this week. That's going to happen on Tuesday. 10 p.m. Eastern time. Right now, they are sitting at 3.75%. And as the world gets a little bit more concerned about growth, Bank of New Zealand dropping from 3.75 down to 3.5%. So a 25 basis point cut expectation there. For those of you trading the New Zealand dollar, that may be an important one for you to watch out for. Now, let's dive to the more important stuff. Right now, there's this discussion of stagflation. I won't go into it here, but stagflation is a result of generally three variables, which is growth, unemployment, and inflation. So, of course, all eyes are on inflation because the market right now and President Trump have said, I want rates lower, lower. Come on, Jerome Powell, work with us. The truth of the matter is, he doesn't have to, and nor should he listen to the market and what they want. It's about data that the market is giving him to make his decisions. Now, what data might that be? As I mentioned, inflation is one of those big key components. So let's dive into some of those inflationary numbers here and see what the expectations are. As you can see here on the Consumer Price Index, CPI, that number comes out Thursday at 8:30 a.m. Eastern Time. Right now, we are at 0.2, as you can see in the hard red edge over there. Expectations are we're actually going to drop on Consumer Price Index numbers down to 0.1. I don't see that happening, but okay, I will take the analysts as their expectations are probably better than what mine are. So expecting a good number on CPI on Thursday. Follow that up with a completely different number, which is the Producer Price Index on Friday at 8:30 a.m. Eastern Time. Right now, we are sitting at 0, as you can see. Expectations are we're going to jump up significantly to 0.2%, showing inflation rising on the Producer Price Index. Now, I guess even more important, be looking at this chart here. This is the year-over-year Consumer Price Index number. So annualizing that number, you can see right now it's at 2.8%. Is that a good number or a bad number? Well, obviously we want that number to be trending lower and lower and lower. Right now, the expectations are that number is going to drop from 2.8% to 2.6%, which should be a fairly positive thing for our markets. Why? Well, if inflation drops from 2.8 to 2.6, then it does open the door for Jerome Powell to cut rates. Markets want that right now. They want that stimulus to come in and drive our markets higher. If inflation comes out higher, though, if we see CPI numbers pop a little bit more than expected, then Jerome Powell may pause and say, we're going to continue to hold rates where they're at. Now, the markets are already pricing in about a 50-50 coin flip on the May 9th meeting. That's our next meeting of the FOMC. There's about a 50-50 chance of getting a 25 basis point cut or keeping things the same. And this data right here will be driving those decisions by the Fed and Jerome Powell. So we'll have to keep our eyes on that one. So a lot of interesting news. Of course, I think just the aftershock effects from our global market sell-offs. We'll see how that persists going forward and what it might mean for our portfolios. That, my friends, is your Monday Morning Must-Knows. We will see you next week.